Hello, I'm Tim Beggins, president of Elk Trading Company. In today's article, natural gas and LNG, this week's main drivers and the look ahead. In today's article, we've got an image of Ras Laffan, the LNG facility of Qatar. This week's main drivers. The U.S. natural gas market stayed under pressure this week as the EIA reported a plus 101 BCF in storage injection versus market expectations near plus 95 BCF. The build reinforces concerns that domestic supply remains comfortably above seasonal norms despite improving LNG demand trends. At the same time, several LNG facilities and pipeline maintenance events began wrapping up, helping restore feed gas flows across the Gulf Coast. However, one notable exception was the sharp decline in feed gas demand at Golden Pass LNG, as commissioning activity continues to fluctuate ahead of startup timing. Weather also turned more bearish for near-term pricing. Forecast models shifted warmer across much of the eastern half of the United States in the 6 to 10 day outlook, reducing late season heating demand while not yet producing sustained summer cooling loads. Globally, the LNG market saw several major developments. Commonwealth LNG officially reached final investment decision, or FID, adding yet another significant future Gulf Coast export project to the global supply outlook. In Qatar, reports surfaced of a heat signature detected near Qatar Gas in the south area, Train 2, raising questions about potential LNG flows. Meanwhile, labor strike threats at several Australian LNG facilities returned to the market radar, reviving concerns about Asia-Pacific supply disruptions heading into summer. The look ahead. The global LNG market enters another critical week with geopolitical and seasonal demand risks continuing to build. Europe remains roughly 6 months away from implementing a full ban on Russian LNG imports, a move that could further tighten Atlantic basin competition for flexible cargoes this winter. In the Middle East, Iran continues to pressure global energy markets with ongoing Strait of Hormuz tensions, although negotiations remain active. Any escalation would immediately impact LNG and crude shipping flows. The Climate Prediction Center, or CPC, is projecting a warmer south and cooler than normal north for the June through August period, potentially creating uneven U.S. power burn demand patterns as summer develops. On the trading side, June NYMEX natural gas futures expire Wednesday, May 27th, with options expiration occurring the prior session. Monday's Memorial Day holiday will also bring a shortened NYMEX trading session, likely reducing liquidity and increasing volatility risk. Internationally, ENI is evaluating a third floating LNG facility offshore Mozambique, underscoring continued long-term confidence in global LNG demand growth despite current market volatility. You can learn more on the links we've included in the article. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.